everyone. Glad to see you again. So we are continuing our program, and next we will invite on the stage Keti, Meparishvili, Regional Manager of Asia at Twino. She is dealing with scaling Twino startup, Twino Fintech startup to the Asian markets from Baltic states. And she will be now talking about how fintech companies can actually navigate in an uncertain times, how they can survive the uncertainty and build their relations with customer and continue selling. So please welcome Keti on the stage.
Hello, everyone. I'm Keti from Fintech company Twino, Europe's most secure P2P lending marketplace, and I'm honored to participate again on Tech Touch. Even during COVID-19, my title hasn't been changed, and I still work as a regional manager of Asia, where actually the next big shift is happening now in terms of financial transformation. As the world enters into the era of tech revolution, fintech products such as P2P lending, digital wallets, online payments, and more is becoming highly sought after. Fintech startups should be prepared for the growing demand and understand the financial industry as artificial intelligence is creating next opportunities for both borrowers and lenders. I remember when I was participating in Touch Digital Summit back in 2019, October, I was standing on Rustavelis theater stage, unlike my current bedroom environment now, sharing my experience to startup fintechers about what's going to be ahead, what fintech challenges they will be facing, and how to tackle those encounters. We were all super motivated to start a new year from the blank page, armed with knowledge and experience, equipped with super cool initiatives to start with. But hold your horses, a tiny 0.06 micron virus completely changed our plans. Yes, we can't deny the side effects of COVID-19. Majority of companies restructured their business models or even ceased operations. It is becoming harder to navigate in uncertainties and come up with strategic plans. Considering the conditions, I would say keep your motivation at hand and use this possibility to draw your new future from completely blank paper, because fintech industry has the most promising possibilities right now. The 2020 New Year was greeted with pandemic never experienced in the course of our lives, affecting countless individuals, families, and communities. These widespread bank branch closures, moving customer from offline to online, and moving finances digitally becomes crucial. However, there is still progress to be made on accessibility of financial services. 1.7 billion adults remain unbanked globally, with a huge proportion of that number coming from the Asia Pacific. This represents an incredible opportunity for digital disruptors to leverage technology and provide sustainable financial solutions in order to bridge that gap. By taking a closer look at the current situation, more people are expected to turn to loans that need proof of income or financial score to serve the unserved segment. With households and businesses severely impacted by the economic disruption caused by COVID-19, governments have announced stimulus measures, which include providing cash payouts to help the most vulnerable in society as quickly as possible. From Singapore to Japan, governments are deploying billion-dollar rounds of fiscal stimulus to minimize economic pain for businesses and households. However, governmental aid turns out to be dismissed to individuals and self-employed people. If there is no mechanism in which to receive that help, especially in Asian region, where a large proportion of that population remain unbanked. Traditionally, government's payments to people were made in cash, but technology broke this conventional form of transactions. It is more convenient, cheaper, and secure way of disbursement for both parties, and what's the most important, traceability tool for government to track the payments and account ownership. Of course, fintech itself cannot solve the emerged problems without adequate support of government. The helicopter view over the situation shows us that Regulating innovative players on the ground are necessary to provide payment options to lower income and unbanked segment all around the world. In the era where cashless transactions are highly encouraged, the first shift that fintech will be facing is to become an intermediary between low-income people and the government. Speaking of the need of digital payments from both governmental and healthcare perspective, that automatically increases usage of online payments and shifting the habit of retaining cash at hand. If anything, this pandemic will push governments with the development of their digital payments infrastructures. An instant real-time payment system is inevitable. The solutions might be similar to United payments interface where the system merges multiple bank accounts into a single mobile application that is giving the user possibility to pay from mobile device. By the way, recently WhatsApp got a green light to use a UPI services. An option could be also a virtual payment addresses that gives possibility to users to share with sender a unique identifier link to their mobiles number, which is like encrypted with the banking ID. Asian region made significant progress in achieving financial inclusion by allowing access to mobile financial services. And more importantly, during this pandemic, using government payments as a vehicle for providing aid for the hardest hit in our society. In fact, this pandemic may be a defining moment for those who could shift from brick and mortar to fully online services. In financial industry, we see many of young financial entrepreneurs creating and innovating whilst the old financial companies are stagnating and waiting for the environment itself to stabilize. Well, companies are stagnating and waiting, but unfortunately, nothing is going to stabilize itself. The technological revolution is unavoidable and knocking on our doors. Those who opens and use that opportunity will be blossoming in the crisis, while the others just continue crumbling. Newbie fintech players must be relieved from the changes of the regulatory requirements because smaller fintech companies are failing exactly at the stage of regulatory compliance, while the big financial institutions are having whole teams to deal with those laws. Due to the reason that the regulatory bodies are failing to keep pace with the changes in technology, that results in leaving many startups operating in gray area. Authorities should not give up startups possibility to fly up in the sky and regulate them only after the startups has successfully launched their products and reached their targets. Health-related restrictions affected on traditional financial industry, integrating technologies in risk management is becoming just inevitable. The challenge is to cut down physical touch with customer, not requesting from them paperwork or signatures, making all traditional identification and assessment process in virtual environment. This trend is pushing the industry to present neo-banking products that are built on a real-time data, comprehensive customer profiles, and artificial intelligence, of course, together with the predictive tools. On the other hand, banks should not be afraid of fintechers because it's highly unlikely that fintech startups will replace fully traditional banks for a number of reasons. First, customers still trust banks over startup companies to responsibly hold their money. Secondly, the banks have decades of trust built through customer relationships, and fintech startups will have to be patient and earn customer trust over time. And another factor to consider is the important exchange between banks and fintech startups through partnering with one another. For banks who lack enough knowledge of entering their steps into fintech world, or for those fintechers who lack enough finances to give wings to their ideas, the good way to start is to share some of the burden with each other, to strengthen team, and deal with the compliance issues with merged power. Markets continue to deregulate. In Asia, for example, financial regulators have tended to be the traffic cops of banking and other financial services, dedicated to keeping the stream of transactions moving safely. Nowadays, in some markets, they are taking on a second role, helping to build a market. During the crisis, lots of financial companies have been creating and innovating, whilst the others just reacting. Unsurprisingly, thousands of small businesses and consumers applied for loans. When traditional bank is unable to offer a business or consumer a loan, fintechs can refer to prospective borrower by funding options, which helps search for an alternative lender. One of such was Funding Circle. The best example of being a medium in time of need was US fintech company Venmo that provided US government aid directly to their users without any burden. They helped US government send stimulus payments to consumers so that it quickly reached, notably people over 50 years, were the fastest growing segment from March to April. Another interesting step was taken by the UK credit bureau Credit Kudos. They built service in weekends to support 5 million self-employed over COVID-19 income loss. They built a proof of concept that allows a self-employed person to self-certify and evidence their loss of income due to coronavirus through a website. The service then uses open banking to collect historic banking data, providing previous income and predicting future loss of income. From technical perspective, the teams have developed a standalone Python web application which is running on Google Cloud. This application interacts directly with the Credit Kudos API and in turn is aggregating data from individuals' bank accounts and applying a number of pattern recognition algorithms in order to deduce the key income figures for the statement. Also, Trino, my company, has launched a real estate investment platform and applied for an investment brokerage company license. On the receipt of the license, Trino will be under the supervision of the Latvian Fintech and Capital Market Commission, and it's already halfway to the bank. The UK challenger Starling Bank rolled out a connected card to allow customers to give a payment card to a friend or courier to do their shopping for them. Getting in food and other essential supplies is a big challenge for everyone who is self-isolating. Why? So that's why the Starlink has developed a new feature to help customers relying on their friends, neighbors, community volunteers to get their shopping for them. Well, there are hundreds of other examples of how fintech industry quickly adapted on emerged trends, while one of the major high street banks has been just like blown up on the other hand. Their call centers were closed with no notice. Their internet portal was broken. They were uncontactable by phone or online. They had zero preparation to shift from offline to online world because what they were lacking is the agility. Banks can no longer stay like as banks. That's very vivid. To keep up with the user needs, they must transform into a full-scale fintech companies, adopt design thinking, become friendlier, and focus on customer education. There is no time for adapting traditional offline products and services and business models for digital channels. Actually, now there is a time has come for digitally instinctive setups and development through the prism of full cycle platforms and ecosystems. In the era of the online platforms and smartphones, it's becoming a meeting point where all customer expectations are met. If we take into consideration the fact that average consumer is using only 7 to 10 mobile applications daily, then we are turning into conclusion that consumers are seeking for unified solutions. In Asia, for example, that is a mobile first region, the concept of super applications that are providing everyday financial and domestic needs has been just flourishing for the last couple of years. And a Chinese multi-purpose messaging solution, we all know this WeChat, for a long time has been a solution for every kind of needs beyond text messages. You can order food, you can pay your home bills, book your travel, pay your kids' school, and etc. So while we can't really see the replication of WeChat on European fintech markets as the all applications are scattered. The majority of neobanks are just using feel the experience your future in their communication level only. So that implies that the next stage is becoming to compacting the multiple applications into one super applications. While we are speaking of communication patterns from traditional bankers as well, as the generation changes, the traditional bank, like this sweet tone of voice, is changing into informal chats. Banks are sharing the best practices of social networks and actively implementing tools for breaking the formal barriers, using just like simplified communication language and digital tools of various communication platforms. As I have already mentioned earlier, credit rating of self-employed people is becoming inevitable. If we want them to access to full-scale financial resources, hence we can't deny increased role of social responsibility of credit rating agencies, so-called credit bureaus, that provide companies instant data to separate good borrowers from bad ones. Unfortunately, not all countries are having a centralized registry of bad debtors, especially in Asian markets, where mostly the banking sector itself has created their own credit bureaus and are not letting fintech startups to integrate and share with them the information. Barriers should be minimized and more people should have a digital access to financial markets. When we talk about increased credit scoring gathering, that automatically transforms as a fintech data that are combined into fintech risk analytics. We can't deny the importance of financial education of the clients as well. As the future of the financial institutions are based on the financial literacy and adoption of consumers, the new trend of behavioral banking is also flourishing in South Asia region. As we all know, the overdue debt rate is very high in that regions. That obliged banks to develop specialized applications that pushes the client to make the right financial decision. The user can track spending and receive awards for success in the form of discounts on banking products. All in all, Asia retains its global leadership in financial adoption. Over the past 2 years, adoption of fintech tools across the region has skyrocketed among consumers and small businesses. There are true factors that will keep the East on cutting edge. A new openness to innovation by regulators, the advent of virtual banks, the growth of API ecosystem, and finally, the entrance of new competitors backed by financial and technology giants. From fast-growing young economies such as China and India to mature markets such as Australia and Japan, advanced fintech systems are just like rapidly becoming a part of everyday life. Fintech services are integrated with e-commerce and social media platforms such as Tencent, Alibaba, WeChat, and etc. Especially in Asian Pacific countries, fintech powered services have doubled. That was over the past years. And virtual bank competition hits also up. This year, for example, Hong Kong bank regulators approved licenses for 8 virtual banks. Open banking takes off. That's vivid. The combination of new regulatory infrastructure and more advanced technical infrastructure in already changing financial services in some markets. Over the next years, virtual banks will be invading financial world through new offerings and that leverage increasingly connected API access. And as a final note, we need to mention that crisis is made up of 2 characters. The first representing danger and the second one is an opportunity. If a crisis is viewed as a dead end or an opportunity, then the focus is on what is lost and what can be gained. So the main challenge we will be facing is to focus on the potential benefits that pandemic brought for us. There is no doubt that it is going to affect every aspect of our lives moving forward. But sometimes we need to step back to jump further, and perhaps crisis is going to act as the catalyst to accelerate financial inclusion in a way that it has never accelerated before. And the world finally will be a better place to live in. Thank you very much.
Hey everyone again. Hey, Keti, thank you a lot for the presentation.
Thank you.
Always great to see you joining our events. Thank you for finding time for us.
Thank you for inviting me.
Yeah, I would love to ask you a couple of questions. So I remember before Touch Digital Summit in October, you said that you have just started working on the Asian market, just somewhere before very close to the summit, somewhere in October last year. So can you please tell us the progress? I mean, like, which countries did you cover already? How fast is it going? In order to, understand how fintech startup can actually move forward into the new markets. How much time does it take?
Well, approximately, it all depends on the IT infrastructure the companies are having, because mostly when you are developing in a one specific country, the process of the product, the characters and configuration, and the backend and the front end, mostly it's kind of replica in the other countries. So we already launched in Vietnam successfully. Now I'm working on Philippines, and we're gonna launch soon, Philippines. And mostly when you are looking into moving into the other countries, what you need to consider, it's regulatory specifics. One, product configuration, what are the main differences between country by country, and obviously the payment infrastructure. So what API the payment gateways will be offering to you. That's the main differences in Asian market. Otherwise, I would say that to compare with the European market, especially the Asian market is giving you the speed of actually entry. There is a very low entry on the regulatory framework. And obviously, it's a huge scale, because to compare the number of the fintech users, actually in Asia, it's much, much, much higher.
Yeah, I can imagine. And that's actually very interesting. I heard that Philippine market is very fast growing in terms of technology solutions, and new millions of dollars are being invested in the Philippine startups. And that's very cool to hear that you actually have successfully entered the market. I can hear from our audience that we need to restart the session. Let me try again. Now we're back live. Okay. So
No?
we were talking about Asian market, and we were talking about successful scale into Philippines market, as I mentioned, that it is quite saturated with technological solutions now. Okay, let's move to the next question we have. Actually, this restarting has removed this question from my memory. Yeah, I wanted to ask regarding the team you have in the fintech. Um, how it's composed, how it's made up, how it's built up. Do you have mostly financial professionals, like finances or accountants, or someone around this profession and industry, or do you also invite other professionals, like I know, like humanitarians like me, or Like it's obvious that you have developers, of course, because you are a technological product from the beginning.
Yes,
But the
yes.
question is like how usually fintech company is built.
So the term itself is telling us fintech. So finance is a technology. That's the most huge department. And risk manager. So first of all, the idea is to develop a risk assessment algorithm in such a way that you will be able to assess the credibility and creditworthiness of your customer. So I would say that's the three major departments that are built on the roots and knowledge and capacity is backend and front-end developers that are actually building the whole system and architecture software through which then the risk managers are throwing their algorithms and all of the logic how to actually assess without documentary requirements. And obviously the team of marketing. So actually the humanitarians and mostly like a content managers can find themselves in a CRM management, writing an interesting blogs and contents, obviously, because in all countries, then afterwards, we are using a state-of-art marketing technologies to promote our brands and work on customer acquisition.
I see. Cool. Okay, so I have a few
Yeah.
industry.
So everyone has a chance.
Perfect. How about educational side? For example, I know some Ukrainian startup that is working on financials and accounting optimization for the companies. And they do what? They do a lot of educational stuff. They launch webinars like twice a week in order for
Mm-hmm.
their potential customers or existing customers to actually teach them how to work with finances, even like if they already have everything automated and any kind of CEO or manager can use their soft, but still they need to somehow understand how it works in general. I mean, it's a very hard industry to get into, just like very being very as they said yesterday, a noob, an amateur.
Yeah, exactly. Yeah, that's actually a very good question because, as I have already mentioned in my speech, the most important part is the education of your customer because that's the innovation, how it's developing. If your customer is not well prepared enough to acquire your innovation, then your innovation will be just like a put on the shelves for the later usage, and you won't be having a wings to fly up in the sky. So we are having on a monthly like a fintech talks. We are having like a tech chills. We are participating in summits everywhere. And what's the most important, we are running a blog. We are having these education materials that are helping our customers to engage with us and understand what problems we are solving, that are giving us and of course research. What you need to also investigate is research. You need to educate yourself as well. And obviously I would have said that this is the most important part when your customer is ready to acquire next stage, whatever you are showing and demonstrating. Already a music on our background.
Okay. Yeah, that's the evening approaching. So we're chilling a bit. The last question I think I would ask, and then the time will be over. When we are building
Mhm,
when the fintech company is building the product, that is primarily sold to banks directly.
mhm,
Um, how do you think who should be approached on the first place in the banks? How
mhm.
do you think we could work with them in general? Who are the drivers of the innovations in banks?
First of all, I think that if you are a fintech startup, that's all, and your main aim is to build a product acquired by the bank. I think that that's kind of downfall of such a fintech because mostly what the fintechs are doing is creating and satisfying the niche that banks cannot handle, you know.
Mm-hmm.
So, but I would say that the solution for the banks is the open banking solutions because They are providing integrations and APIs for starting with the payment gateways, finishing generating like multiple data sources, which is the most important for the fintech. So I would say that if the fintech is starting to build up from the scratch and from the zero, they need to address to the let's say innovations or digital banking center in any department of the big banks. But I would have suggested to satisfy your little niche, find and pursue your goals.
Okay, that's a very good suggestion. I would say advice, not just suggestion. Okay, thank you a lot, Katie. Our time is
Thank
unfortunately
you for
over, but we can always continue.
thank you for inviting.
We can always continue the conversation in the event chat, in the live discussion in the evening. Join us, please. We will be happy to see you there.
Sure. See you. Bye.
Thank you. Bye bye.